The UAE just walked out of OPEC. India is paying for Iranian oil in Chinese yuan. And the BRICS grain exchange is being built right now to replace Western controlled commodity pricing, all in the same week. Most headlines call this market turbulence or emerging market volatility. But if you follow the logic of where money moves and who controls the levers, this is something far more structural. Let me break down why this matters for BRICS power. I'm Anastasia from Think BRICS, where we cut through the noise to track the money, energy, and power shifts shaping the global south. No spin, just signal. Today, we cover four critical BRICS developments from the past week. 1. Energy sovereignty and oil market realignment. The UAE breaks from OPEC and what it means for the global energy order. 2. Financial resilience and institutional expansion. The de-dollarization engine accelerates with Belarus, Ethiopia, and the digital currency revolution. 3. Diplomatic coordination and strategic multipolarity. From the spirit of Bandung to India's 2026 BRICS presidency, the bloc finds its intellectual spine. And 4. Digital infrastructure and developmental cooperation. From submarine cables to pharmaceutical sovereignty, how BRICS is building the backbone of a new world. 4 stories, one through line. Let's get into it. Let's start with the headline that rattled energy markets this week. As of May the 1st, 2026, the UAE has formally withdrawn from OPEC and OPEC Plus, marking a new chapter in its sovereign energy policy. Now, OPEC has long been the framework through which Gulf producers coordinated production and through production price. For decades, these quotas served a geopolitical function as much as an economic one. When Abu Dhabi steps away, the production numbers are almost secondary. What Abu Dhabi is saying is, we set our own course now. The UAE is reclaiming the right to independently determine its own output levels, aligned with its own investment strategy, not with a collective governed by agreements that, frankly, haven't always reflected the interests of every member equally. This is fragmentation, yes, but it is strategic fragmentation. Meanwhile, on the other side of the world, India is making an equally decisive move. ONGC Videsh, India's state-owned overseas exploration arm, is looking at a $1.17 billion investment into Brazil's pre-salt offshore oil layers. Pre-salt is the frontier of deepwater oil exploration. Brazil's offshore reserves are among the largest untapped pools on the planet. And India going in through a state-owned vehicle rather than routing capital through a Western major shows that the South-South Energy Partnership BRICS has been discussing for years is moving from rhetoric to checkbook. Now there is more. India and China are in active consultations about MENA, the Middle East and North Africa, a region one report this week called bluntly a treasure of oil and gas, vital for global stability. Why does this matter? Because the Strait of Hormuz, the world's most critical maritime choke point, has been disrupted, and BRICS members aren't waiting for Western-led maritime security to solve the problem. They are building their own logistical resilience. And here is the development that may fly under the radar, but could have the deepest long-term consequences. Russia and the UAE are building the framework for a BRICS grain exchange with support from all bloc leaders, as we already told you in our previous videos. But here is what mainstream coverage missed. Taken together, the UAE OPEC exit, the India-Brazil energy deal, the MENA consultations, and the grain exchange, these are the long-bearing beams of something larger, an energy architecture where the global south increasingly calls its own shots. Now, step back. What's the real leverage here? Energy is one pillar, but the other pillar, arguably the more durable one, is financial architecture. And this week we saw significant movement on multiple fronts. Belarus entered formal consultations to join the new development bank, the NDB, the BRICS bank, to simplify. The reason is straightforward: access to development financing outside Western controlled channels in national currencies without the political conditions attached. And Belarus won't be the last. Ethiopia, which was recently admitted to the NDB, is already being described as a milestone in African participation in BRICS-led economic cooperation. As Western institutions impose conditions and austerity-linked lending, the NDB offers something different: financing in national currencies, infrastructure focused without ideological strings. Here is where it gets interesting from a financial architecture standpoint. India recently settled Iranian oil purchases using Chinese yuan, processed through the Shanghai branch of ICICI Bank, one of India's largest private lenders. Now, observers are quick to note this was partly driven by necessity. Maritime disruptions made conventional dollar-denominated settlements complicated, but necessity often becomes habit, and habit becomes structure. And while we are on de-dollarization, a quick reality check. This week, India's External Affairs Ministry had to publicly debunk claims circulating on social media that India was blocking de-dollarization proposals within BRICS. The ministry called them out directly: false, baseless, and worth ignoring. So if you saw that going around, now you know. Don't feed the noise. Quick note: think BRICS is independent. No corporate money, no lobbyists, just us and our audience. If you want to support us, think of a super thanks here or via our Buy Me a Coffee page, link below. Even small support keeps this going. Now back to the story. Who really wins from this economic realignment? To answer this question, we need to understand where the diplomatic work is being done. After all, energy agreements and financial instruments require political will, agreement between institutions, and a shared vision to succeed. This week has shown us that the BRICS countries are working on this. The third annual BRICS Think Tanks Council Conference took place in Ethiopia, bringing together member states and partner countries to align policy perspectives ahead of the 2026 summit. The agenda covered artificial intelligence governance, climate leadership, and multilateral reform, not just economic cooperation. This is a bloc that is building an intellectual foundation, not just a trading bloc. Think of it as a revival of the 1955 Bandung Conference, when newly independent nations of Africa and Asia said, "We choose our own path." Scholars today call BRICS the continuation of that unfinished project. India's 2026 presidency theme puts people first. And the idea is spreading beyond BRICS itself. Senegal, a country interested in joining BRICS, is just reclaimed its phosphate mines from a foreign company, justifying the move, and argued persuasively as basic economic accountability. Contracts that didn't serve the public interest get revised. Full stop. In Peru, a presidential candidate has made BRICS membership an explicit campaign platform. 5 years ago, that was unthinkable.
Por ejemplo, los BRIC nos parece un espacio importante donde tendríamos muchas materias comerciales donde pudiéramos potenciar y desarrollar aún más, ¿no?, de lo que hoy Perú expresa y tiene en el ámbito comercial. Nosotros tenemos esa aspiración.
And this is because BRICS is dead, right? Last but not least, digital sovereignty. This week, Brazil presented a three-pillar strategy for the resilience of submarine cable networks, the physical cables that carry 95% of all global internet traffic. The pillars: timely infrastructure repair, rigorous risk monitoring, and geographic diversity of routing to eliminate systemic choke points. Why does this matter for BRICS? Because submarine cables have until now largely been routed through nodes under Western jurisdictional control. A coordinated push to diversify those routes means the global south's data and communications stop being structurally exposed to external oversight or disruption. That's digital sovereignty built one cable at a time. India is using its 2026 BRICS presidency to share the India Stack, its digital infrastructure model built around the Aadhaar identity system and the UPI payments platform, as a blueprint for developing nations. The offer to partner nations is concrete. Here is a proven open architecture model. Take it, adapt it, own it. No dependency on Silicon Valley or any single external provider backed in. UPI already handles billions of transactions every month. The model works. Now the question is whether BRICS members will adopt it at scale. Then there is healthcare. As US funding through PrEP-FAR starts to shrink, South Africa is turning to India and China for lenacapavir, a critical HIV treatment. India isn't just supplying the drug, it's sharing the knowledge to manufacture it locally. That's South-South cooperation in its most concrete form, not a summit statement, but medicine on the ground. And quietly, the BRICS Entrepreneurs Alliance has published the Hyderabad Declaration, a roadmap for connecting small and medium businesses across member economies outside of Western-dominated platforms. SMEs are the backbone of most BRICS economies. Linking them is the low-profile revolution running underneath the louder geopolitical headlines. If this momentum holds, and the institutional signals say it will, the next 12 to 24 months will look noticeably different. New NDB members, operational CBDCs corridors, submarine cable routes that no longer funnel through a handful of Western-controlled nodes, and thousands of small businesses across BRICS economies trading with each other on terms they actually negotiated. None of that is a revolution. All of it together is a structural shift, and structural shifts don't announce themselves. They just become the new normal. The dominant narrative tells you that the global order is stable and that any challenge to it is destabilizing. But what if stability for billions of people has always meant being on the receiving end of someone else's decisions? The BRICS project, at its best, is an attempt to change that. Not perfectly, not without friction, but with genuine momentum and with the weight of more than half of the world's population behind it. The question worth sitting with isn't whether a multipolar world is coming. The evidence suggests it already is. The real question is, what kind of multipolar world are we building, and who gets a seat at the table when the new rules are written? Let me know your thoughts, and thanks for watching.